Welcome to Study Time, a televised home learning program produced by Rwanda Basic Education Board.
Hello, dear students. How are you, dear friends of mine? Senior 6 students, how are you? I am teacher Jean Damascene. I'm here to discuss with you Senior 6 Entreneurship. Dear students, as you can see on our chalkboard here, today we are dealing with Unit 4. Okay, the Unit 4 is the financial markets. Dear students, you remember last time we talked about Lesson 1, Lesson 2, Lesson 3, Lesson 4, Lesson 5. By now, we are going to discuss Lesson 6, which says the capital markets participants. Okay? The people who participate in the capital market. Okay? Now, dear students, as usual, and as we always work with objective or an ambition, it's just here I have some objective of the lesson. So I expect from you at the end of this presentation, at the end of this discussion, I expect from you to be able to explain and identify the participants in the capital market. Okay? When we reach to an end of our discussion or the end of our presentation for today, and when we will be able to list or identify the participants who participate in the capital market, and when you will be able to explain each individual who participate in that capital market, so you will be more successful. Okay, so I just want to welcome you, just wishing you a happy moment as we are going to be together with you in this period. So let us share what we have and we see whether at the end there should be some change related to our current knowledge. Okay? Now, dear students, of course, the teacher may ask you to brainstorm in certain circumstances or in a certain concept so that he check whether we are together. Okay? So when the teacher asks you to brainstorm a certain concept, you have to use your mind quickly and see whether what the teacher has prepared for you is similar to what you have discovered by using your mind. Okay? That's why, that's how I will measure whether we are together. Okay? So feel free and you are most welcome in this presentation for today. Dear students, as we highlighted here, the lesson for today is the capital markets participants. We have the capital markets, participants. The participants, the people who participate in the capital market. Now, dear students, if you remember, we tried to talk about the capital market. We have seen the meaning of capital market. Okay? We have seen the types of capital market. We have seen the businesses that are carried out by the capital market. We have also seen the responsibilities of the capital market. We have seen the instruments that are used in the capital market. Okay? All those are the lessons or the topics that we discussed together. Okay? So, by now, after knowing the meaning or the definition of the capital market, after having possess all those information that we said above, I just want you to construct yourself the participants whom you think they intervene in the capital market. Okay? Try to use your mind. Try to gather some views, some ideas, and tell me, whom do you think are the participants of the capital market? Try to think. Yes, according to what you have gathered, according to ideas that you have collected related to the participants in the capital market, let us see in detail the criteria considered when setting these participants in the capital market. Dear students, that's why I want you to face the screen there. I have prepared the small text related to the participants who participate, who act in the capital market. So let us read on our screen there. Let us read it together and see what is there on our screen related to the capital market. Okay? So I want you to face the slide so that we check whether what is written there can guide us to the answer. Okay? There we say that in the capital market, there is a flow of funds from one group of parties. Those parties can be funds, the surplus units, known as investors, to another group. These funds or deficit units. Okay, we have the surplus units and the deficit units. They require funds. These funds is an aid. Okay. However, often these groups, they do not have direct link. Okay. The link is provided by market intermediaries such as brokers, the mutual funds, the leasing and the finance companies, and so on. Try to note that. There we have the brokers. We shall see the meaning of brokers. But of course, the brokers should intervene in the capital market. We have also the mutual funds. We also have the leasing and finance companies. Okay. The players in the capital market, they can be divided into investors, the issuers, and the intermediaries. Can I repeat this? The players in the capital market, they are of course divided into, we have one, the investors, we have the issuers, and we also have the intermediaries. Okay. The market intermediaries in Rwanda, we have the Rwanda Stock Exchange Market, the licensed brokers, the dealers, and the sponsors. The regulator is the Capital Market Authority. So you remember in lesson 5, we discussed about the Capital Market Authority. We have seen that they regulate and develop the capital market industries. Okay. So they are also the one who are in charge of regulating the Rwanda Stock Exchange, the licensed brokers. These licensed brokers, they have the permission to do the brokerage. We have also the dealers as well as the sponsors. Okay. So briefly, the main participants who participate in the capital market, we have the investors, issuers, and the intermediaries. In intermediaries, we have the Rwanda Stock Exchange market, we have the licensed brokers, we have the dealers, as well as we also have the sponsors. These sponsors, they are regulated. They are controlled by the Capital Market Authority. Do you understand this, dear students? So by now, according to the text or the statement that you have read together, I am now hopeful that you can identify some participants who can participate in the capital market. Okay, that's why we have to start from the participant number one, who is called the investors. We shall have the investors. Okay. These investors are the main participants who participate in this capital market. Okay. Now, when I say investor, what do you understand by the word investor? This investor is somebody, of course, he has what can I call the financial securities, which can be on one hand the finance, the money. He invested them for expecting the profit. That's why he may come and buy some financial securities of value on a certain price, after the discussion. So after that, he reinvested them or he resell them to get the money higher to what he had before. Those are the investor. Okay. The investor, of course, is a person. They can be a person or a group of people. They have the legal entity that allocate. Okay. This legal entity, they allocate the capital with the expectation of future financial return. Do you understand this? Dear students, do you understand this? I mean, the investor can be one person or a group of people or a legal entity, but they allocate the capital with the expectation of future financial return. Do you understand this? Example. When we are in the season of harvesting, maybe, let us say an example of beans. Okay. We are yielding beans. If you have your money, you can go there and maybe buy 1 kilogram of beans. It can be costing maybe 200 after drying them. You buy them, you go and store them somewhere in some warehouse or any other stock. Okay. Now, they stay there for a certain period of time. Maybe after 1-2 months, you take back your beans and you sell them to the market. You had a target of earning a profit of 100 per 1 kilogram. Okay? Do you understand? So, you bought them on 200, you resell them, you get 300 each kilogram. It means you are getting 100 on the kilogram. So by that time you have invested in buying the beans and you have expected the profit and you get it in future return. That is an investor. As the major or the main participant in the capital market. Dear students, are we together? So now you understand that investor is a participant in the capital market, and you also understand who is investor. You invest for future expectation, which will be positive. That is the positive future expectation return. Okay, so there we are now together. I have another participant who participate in the who participate in the market, the capital market. We have the issuer. The issuer. The word issuer or the term issuer, you all know this. I think you have heard about the stock exchange. We have seen the method of stock exchange, where we can talk of FIFO and REFO. We normally, when we are working with stock control, we normally talk about the issued. But what do you understand by the term issuer? Okay. The term issuer, it refers to a legal entity. This legal entity can be the government, it can be the corporation, it can be also the investment trust. Okay? But this legal entity, they develop, they register, and they also sell the securities to the investing public in order to finance its own operations. Those are the issuer. Okay. After issuer, we also have what we call the stock exchanges. We have the stock exchanges. Okay. In stock exchanges here, we shall have the primary. We shall have the primary markets. We shall also have the secondary markets. Primary markets and secondary market in the stock exchange. Okay. Now in the primary market, but you remember this when you have been talking about the capital market, we have seen that it is of two types, either primary market and secondary market. Now it also comes to the stock exchange. Okay. The primary markets where the corporations, the governments, and other incorporated bodies, they can raise their capital, but by channeling the saving of investors into productive ventures. Okay? Do you understand this, dear students? In the primary markets, let us read together about what is on our screen for better clarification. Yeah? There, I have told you that the stock exchange, as you can see, on the stock exchange, there is a primary market. But in the primary market, the corporations or the government and the other incorporated bodies, they can raise their capital, but by channeling savings of the investors into productive ventures. And now, different to the secondary markets. On the secondary markets, the investors can sell their securities to other investors for cash, thus reducing the risk of investment and maintaining liquidity in the system. The stock exchange, it imposes the stringent rules, listing requirements, and the statutory requirements that are binding on all listed and trading parties. Okay, so that's all about the stock exchange. After having stock exchange, we should also have the stock brokers. The stock brokers. But you remember that the stock brokers, we have the licensed one and non-licensed one. If you are licensed, you are accepted by law. If you are not licensed, you are not accepted by the law. You are not permitted. So you are doing things illegally. Okay? That's why we say that on the stock brokers, can you know their responsibilities of the stock brokers, their students? Can you recognize the responsibilities and the role of the stock brokers? That's why we have tried to detail some meaning and clarification related to the stock brokers. So I want you to face the screen or the slide and read it together what is prepared there according to the stock brokers. Okay. Now, according to the meaning which is there, a stockbroker is an agent who represents clients to buy or sell stocks and other securities. Okay? They represent the clients to buy or sell stocks and the other securities like bonds, like shares, and so on. Okay, those are the brokers. They stand in the place of the client. They are the one who bargain, and the client come finally after the bargaining. Okay, the commissionaire, you know them. The term is applied to both companies that deal in securities and their employees, okay, who technically are registered representative working for the brokerage. A broker's primary services is to buy and sell stocks on an exchange for members of the investing public who wish to own part of company. Okay, so there now we have the dealers and traders. We have the dealers and the traders. It is also another participant who participate in the capital market. A stock market dealer trades equities under its own. The business itself maintains stock holding that are not in the name of any client. The dealer may actually be a client or another broker so as to trade the stocks for its own account. Okay? So, again, you can have the sponsors. The sponsors are also another participant who can participate in the capital market. Okay. The sponsors, they can be a range of providers and entities supporting the goals and the objective of capital market. Do you understand this? They are providers. They fund they fund the capital market. Okay. They can invest in private companies. They can also create the demand for the publicly or the publicly traded securities. Okay. They underwrite the mutual fund shares for public offerings and issue exchange traded funds over platforms. Okay. Those are the sponsors. So now there we can have the the benefits of investing through the capital markets. You can access the capital. You can discover the value of its business, okay? You can raise a company's visibility and enhance its status with customers and suppliers at home and overseas, okay? We have a better bargaining position with financiers, okay? So increase the capitalization of an issuer over time enables the issuer to raise capital at lower cost due to their improved rating in the market. Do you understand this? Now, we have enhanced management practice to foster employee motivation and the benefits from capital market incentives. Now, dear students, let us go to an end of our presentation for today. I have two questions related to exercise and concerning the discussion that have happened for today. I have the question one, which is identify and explain in the capital market participants and explain why we should invest in the capital market.